Welcome back to my Vanguard portfolio update now for the month of February. Another month has gone by in the stock market, and I think it's fair to say that the stock market has just done stock market things. But there's only one single star of the show. Just before we jump into the portfolio, let's have a quick update and review of all the markets of what's going on over in the US and here in the UK. So I think it's fair to say that the last month really has all been about a single stock in the US market, and that is Nvidia. Now, as of time of filming this video, just up for the month, already over 30%. Who knows by the time this goes live what actually happens and whether it continues just to go higher and higher. Now, there was a slight little dip in the stock market as it continued its rise steadily upwards. Just before Nvidia released its earnings, I think there was some expectations there. Potentially, Nvidia may not blow everything out the water, but how wrong most people were. And just have a look at these ones on screen now. I think some of the figures here are incredible. So if you have a look here, 22.1 billion for the fourth quarter. That's a rise of 265% year on year, and net income surging to 769% more, which is just incredible. Now, another interesting fact about Nvidia is actually now the third largest company in the world by market cap. I think it overtakes Alphabet now, and it's amazing how quickly that those things can happen. It's also amazing how quickly that sentiment can shift in the market, as you've just seen. Now, whether or not Nvidia is massively overpriced and everything's just in an AI bubble, who knows at the moment, but I will say that many people last month were calling at the top of the market, but all of a sudden things can just keep going further and further. So really, who knows? But I will say, as a long-term investor and an index fund investor, really, this is not something I worry myself about. Now, just on the wider market, have a look here at the S&P 500 to see how that's performing so far. You can see year to date so far 7.26%, and up the month for 4.5%. And yes, this is setting brand new all-time highs, which means many people on YouTube will be making videos. The stock market has to crash and they're going to keep some cash on the side. Well, a good reminder, those people did that last month, the month before that, the month before that, the month before that, the year before that, and many more years before that. So please don't try and time the market, guys. Now, final bit of news on the US side that kind of slipped through the net, actually. I think a lot of people missed this one, and myself included nearly missed this one as well. But Amazon is now being placed in the Dow Jones Industrial Average Index, which is quite interesting. Now, this is an index of just 30 stocks, and it's a price-weighted index rather than a market cap-weighted index, which is quite weird, and I find it a little bit outdated. But anyway, Walgreens Boots Alliance, or WBA, got knocked out, and Amazon has been put in its place. And you can have a look on the screen now what that might look like. I do find this one kind of less relevant, but again, it has been hitting new all-time highs, and the index is kind of that bellwether of those blue-chip stocks. I think it's kind of less relevant today. I think in the days gone by, it was kind of that staple that lots of investors like to look at. Nowadays, I think the S&P 500 and the NASDAQ 100 are the ones that people look up to, probably because they've gone up a lot. But anyway, it's still interesting to know, and I find it quite interesting that Amazon, even a fast-growing stock, has found its way onto the Dow Jones Industrial Average. Although saying that, people like Apple are also on that index too. Now, quickly, closer to home, I hope you're all enjoying your technical recession here in the UK. It's 2 quarters we've now seen of negative GDP growth. So, as many people may have expected or felt out there in their daily lives, the UK is in recession. Although it's just a little one, it's just a technical one, we're still in recession at the moment. And just having a look at the markets, well, they didn't really care when the data came out, which was quite funny. I did make a community post and the FTSE 100 was like, recession? What recession? But then the FTSE 100 does have, lots of stocks who trade internationally. So it was quite interesting anyway. Now, just on those markets very briefly, the UK market is actually up 2.7%. I think we can get a big round of applause there. And the FTSE 250, which is more of a reflection on the UK, is up for the month, but down for the year. Still not the most exciting place to be, but I'm sure many of you will probably have a little play around in some of these stocks because many people just don't focus on these kind of markets. But certainly a lot to be negative at the moment here in the UK. Now, finally and briefly on the recession and everything that's going on here in the UK around inflation and interest rates. In theory, with the recession taking place at the moment, even though it is a very mild one, this should encourage the Bank of England to consider reducing interest rates. They do have that careful balance to make sure the economy is stable and keeping inflation in check as well. But if the economy is going down the toilet, then actually reducing interest rates to promote some sort of growth, promote people to take out loans, to promote and make money cheap effectively, could be coming down the pipeline. Although there's been no real signs of this happening, expectations are at the moment, I'll put them up on screen now, at least from Goldman Sachs, saying that they expect to see 5 consecutive 25 basis point cuts this year, lowering rates from 5.25% where they are now to around 4%. It then actually sees the bank setting a terminal rate of 3%, just meaning the end rate, in June 2025. So we're still seeing that narrative of rates higher for longer. Those days of 0.5% and 0% rates, I think, have pretty much gone, but who knows? I don't try and predict these things. I do think it's quite interesting. It's always a very, very difficult thing for them to try and balance. Just finally touching on inflation data, I do like to use that website Trueflation, and it reckons at the moment UK inflation is around 2.5% as a kind of live data right now. Just to compare that to the US, they reckon they're down at 1.71%. So what this should mean is that the next time we get inflation data out, we should start seeing figures closer down to these numbers, because the data that they obviously use is going to be lagging data. And this data is something that they're going to be interpreting to decide whether or not they can reduce rates. So very interesting at the moment, and I hadn't looked at Trueflation for a while. To see it down there, although many people will still be experiencing things going up fast, and inflation as a low number still means that prices are going up. It doesn't mean prices are going down, although there's much reporting about the fact that that is kind of the way things are. A low inflation number is suddenly prices going down. It's very, very weird. Many people don't understand basic maths, but I don't blame people because no one explains this to them anyway. And finally, before we jump into the portfolio, just a very quick update on crypto as well. I say crypto, but really just Bitcoin, up 28% for the month, priced in pounds at £40,000 or $51,000. Certainly been a very, very well high-performing and fast-performing asset class for the last couple of years. Now, time to jump into the Vanguard portfolio update itself. I think you'll be in no surprise now that we are seeing, finally, some brand new highs in the account, overtaking some of the old ones from just a couple of months ago. As you can see on screen now, and many older viewers will know, I have my pension here and also an old ISA account. No new money goes into this account, but maybe it will kind of as we head into the new financial year, but more on that one a bit later on. But let's just see how things have performed. In total, the number we're looking at is 62,457 and a personal rate of return of 21.88%, which is really, really nice to see those kind of bigger green numbers if you have a look in the account now. And if you expand that out into the pension and the ISA, you can see the exact amounts of money that those things are up. It's always nice to see mentally and as a long-term investor to see kind of things working and kind of compounding in action, but anything can happen. So as a long-term investor, I'm also prepared that this could do pretty much nothing. As always, let's have a look inside the investments tab, one of my favorite tabs on the Vanguard website, to actually go through, especially month by month, to kind of show you what you have to deal with as an investor. And if you are a newer investor who's been investing just for the last couple of years or even the last few months, and although you have had a relatively good time to start as things have been going up, you will have to deal with those fluctuations. So have a look here on this graph. You can see we were struggling to beat that kind of £60,000 mental barrier, but toward the end of the year and the start of 2024, things have been going up and up and up where they are now. So the account is at new all-time highs. Does this mean it has to go up from here or has to go down from here? Nobody knows, but there'll be plenty of people on YouTube to tell you which direction it will go. Don't worry, trust me, bro. Just breaking things down briefly down the performance tab, have a looking through month by month. It's always an interesting one to get that shorter and long-term view. You can see really since the end of 23, things have been insane really. November, December, January and February, just all pumping up those returns, giving us a big cumulative number here at the end. But as many regular viewers will know and something you've tuned into, we've had to go through the dark times as well. We've had to go through the times of negative returns in the account. But really, this is where, good, strong investors are made, that you just keep going and you keep holding through those bad times and you end up where you are at the moment. Now, a couple more things I was going to highlight this month. Was going to say I did actually make a video just very recently, which many of you probably have watched already, which is going through all of the things that I think you need to do before this tax year ends. And really, I think why accounts like the ISA are so important this tax year or next tax year, because your allowances are being dropped, etc. So go and watch that one after this video. I do think it's really, really important for many people to wrap their heads around that, because although many of you will have all of your investments inside ISAs and SIPs and pensions, I know many of you, and myself included, had lots of money outside of those accounts, whether it was just a small amount to play around with or because you weren't bothered. I mean, myself, for example, I had lots of money in an old Hargreaves Lansdown fund and share account because I kind of thought, well, the allowances are quite big. I can sell 12,000 profit worth of stocks and make a big capital gain and pay no taxes. So, and I'll figure out getting money into an ISA later on. But really, these days, and with the money getting chopped in half and chopped in half again, I think it's now more important than ever to do this. And as always, if you do want to get yourself started with any ISA account, I do keep the links to all the platforms that I use in the description below, and you can get yourself some free cash and some free shares just for getting started. For reference, I use Vanguard, I use Trading 212, and I use Invest Engine, all for my ISA accounts. And I share most of that, apart from my individual stocks on Trading 212 here on YouTube that you can keep track of. And just going on briefly to the point I touched on earlier about ISA accounts, we should see in April in the new tax year the ability to put in new money to more than one ISA account per year, which I think will be quite game changing. And it will mean you won't have to just pick and choose one ISA provider for a tax year and stick with them for that whole tax year and then transfer out and play around with that. I think this is going to be really interesting. It could be, for example, you start having an index fund provider, you start having a individual shares provider, and you kind of move your money and spread your money around different platforms and different ISAs. And I think this will encourage a bit more competition maybe in the industry as well. Who knows? I think we are going to be seeing more of those US players come over here into the UK. The likes of Webull are already here. I think Robinhood as well are set to launch later on in the year. So it is good to see a bit more competition, and it is going to be really good and much simpler that you can contribute to an ISA, different kinds of ISAs in one tax year. Because many of you get confused about that, and I don't blame people. It is confusing to say you can contribute money to one type of ISA and one account per tax year. Lots of people get confused about the limits, about how much an ISA can grow, where the taxes are, but that transfers aren't included once the money is inside a bucket, and all these things can get really, really, really complicated. So I am glad that I hope that gets made simpler, and I hope that does get made law and made official as we go into that new tax year. But I will keep you updated if anything changes. Now, final thing to say, and I think I did touch on this one in last month's update, you will see, and I don't mention this too much now, but all of my investments are in a single mutual fund, the FTSE Global All Cap Index Fund accumulation version. All that means is this is an index fund which automatically reinvests dividends and follows the FTSE Global All Cap, which is basically a global index fund with some of the world's largest companies and the smallest ones as well. It covers thousands and thousands of investments. Everything is all weighted according to market cap. It's a passive investment style. I just set that one and forget that one. But saying that, there are more options now on the Vanguard platform. And I did, again, a video about this one, taking you through all of kind of the best Vanguard index funds I think you can buy. They have a good selection now, and there also are ETF versions too. Do make sure you understand the difference between an ETF and a mutual fund and kind of pros and cons of each on the Vanguard platform. And many of you were asking, for example, oh, you owned VWRL or you owned VUSA, which are two different ETFs on Vanguard's platform. If you can switch, if you should switch to the accumulation versions. Again, that's always up to you, but it is very easy to do that. Just get these three little dots here and you can do that here. So for example, if you were in VWRL, but you didn't want to keep receiving those dividends and reinvest them yourself, because quite annoyingly, and still to this day with Vanguard, unfortunately, you do not get an email or any notification that dividends have been paid. I know my girlfriend gets this on her account, and I have to kind of remind her that, 6 months later, go and check your dividends because you've been paid dividends and that cash is just sat there, and I think it's quite poor, to be honest. But if you have a look on screen now, if you click these three buttons, you can obviously switch, top up or sell. If you do switch, it is the same as, selling and then rebuying something else. If it's done inside the ISA, then it's absolutely fine. There's no capital gains or anything like that to pay. It might reset the performance numbers if you really care about that, as you want to see a green number in your account. But personally, if you want to grow wealth in the long term, I would rather just get the dividends reinvested, but that's just my personal view. If you don't want to do that, that's fine. I'm not your financial advisor, as always, never claimed to be. So please do whatever's right for you. But long-term wealth, I think, the simpler the better, really. Anyway, I think that wraps up the month. Any more questions, let me know in the description below, and do make sure you watch this next video later telling you all the things I think you need to do before the new tax year ends, and I'll see you in the next video. Happy investing.